Hello everyone, my name is Rahul Mahto. Today I am going to present on a topic is the imperative for microinsurance in India's microfinance ecosystem, bridging the financial protection gap for low-income households. In this topic, we are going to discuss why microfinance is not only a product, but it plays a crucial role as a kind of pillar for low class of income. So let's move on the next slide. India has done many things with financial inclusion and mainly focusing on rural areas. If we look about micro insurance, which is one of the most important financial product, the market size of micro insurance is 4.84 billion, and it will increase at the rate of 6.2% CAGR to 2035. If we talk about the number of people who have enabled the micro insurance, is around 200 million people, which makes India the highest number of micro insurance policy holders. Third one, and insurance, if we talk about insurance penetration, it is 4%, as compared to globally it is 6.8%. There is a gap of 2.8%, which shows that most of the underserved people or low class of people are still need to take insurance, and they are in a high risk. Some of the there is a chart which shows the growth of this market. So in 2024 it is 4.8 billion, in 2027 it is 6 billion, and it is going so on. So what are the main factors which increases the market size? First one is digital distribution. The UPI payment or other things increases in the market, which make persons or the peoples unable to use financial products. Second one is government push. Government are also working to increase financial inclusion, which make them enable the financial products, mainly insurance, and their vision is insurance for all by 2047. Rising awareness. Creating awareness is important because in rural areas most of the people doesn't know anything about insurance, why it is important. So 70 million plus rural households covered under due to this awareness. Third one is climate risk. 45 million farmers covered under crop microfinance, which shows that a good number of risk or a good amount of risk has been reduced. Now let's move to the next slide. So in this slide, we will discuss about different types of risk which is faced by the lower class of household. First one is health emergencies. If any kind of health emergencies arises, then the cost which is incurred by them is around 30,000 to 2 lakh average medical costs, and around 55 million Indians are pushed in the poverty due to health emergencies and do not having enough funds in this event or uncertain event. Second one is accidental death or disability. Any kind of accident or disability happen, then it destroys the family, and around 450,000 annual deaths happened in a year. Crop failures. This one is also very important because crop is the big amount of investment made by the farmers, and it is notable that other things can be controlled, like health by taking care, accident by uh, focusing on activity, but climate cannot be controlled. So around 45 million farmers need coverage like micro insurance for uh, farmers. And the fourth one is livestock losses. Around 5 million animals insured under micro insurance. And there is one proverb which is given by the Women's World Banking Research, is one health emergency can wipe out 5 years of savings and push a family back into poverty. Micro insurance is not a luxury, but it is a lifeline. Means micro insurance is not only taken by the only taken by the people who can afford it, but it should also take by the people who need it by anyhow. Means it will save the family in any uncertain event. Now we will talk about what are the things that can impact both the parties. If any kind of uncertain event happen, then the uninsured person have to borrow money at the rate of 2 to 3% monthly, which exceeds 24,000, 24%, 36% yearly, and it is mostly done by the money lenders. Second point is portfolio risk. Increase in defaults makes any microfinance institutions less protected, means their non-performing assets will increase and they will not be able to give more funds. And third one is saving depletion. As it is already mentioned that any kind of health emergencies can wipe out 5 years of savings, so it is important to have micro insurance. If we talk about percentage who are having insurance, so 60% of low income households are lacking in insurance. So now let's move to the next slide. In this slide we will discuss about the different types of schemes which is given by the government to the low class of people. First one is Pradhan Mantri Jan Dhan Yojana. In this scheme, more than 66.6% people are from rural areas, which means that it is highly impacted, positively impacted on the rural class of people, and 55 crore of accounts are opened. Then we will talk about Pradhan Mantri Suraksha Bima Yojana. It is a kind of accident insurance which saves from any kind of accident, death or disability, and around 50 crore insurance are sold or policy holders are there. And third one is Pradhan Mantri Jan Jeevan Bima Yojana. It is related with the life insurance, and there are 23 crore policy holders, and at the rate of 436 per year premium. Now we will talk why these are very successful. First one is affordability, which means that these are pocket friendly and less costly. Then easy access and enrollment, which means that more of the people are enrolled, and awareness. And third one is product simplicity. These products are very simple and user friendly for the rural class of people, as they are less knowledge regarding financial inclusion. So now we will discuss about distribution dynamics. Microfinance institutions as insurance channels. Microfinance institutions having 3,48,015 crore of portfolio outstanding. Out of them, NBFC microfinance institutions share are having largest, and active borrowers is more than or approximately 100 millions. So now we will talk distribution models. First one is partner agent model. Most common, microfinance institutions distribute insurer products for commission, means low risk and limited servicing control. Then full service model. This one is another kind of model where they provide all kinds of insurance and having full control under their own firm. Then one is community based model. Under this they will provide policy to the general people in a group, and they control and risk according to their own interest and save. Now opportunities for borrower. First one is comprehensive coverage, then premium financing, group discounts, and digital integration. Let's move to the next slide. Now we will discuss about the critical challenges hindering penetration. First one is high transaction cost. So sometimes what happens, there is high cost arise for the insurance, like average premium is 250 and the service cost is 80 to 120, which shows that 50% is cost. Then trust deficit. Sometimes also there is less trust, which impacts on the insurance. Then limited intermediate capacity, means in rural there are limited people who are reaching to the customers for providing insurance. And the third one is low awareness. Rural people have lack of financial inclusion, which makes them low awareness, which reduces the penetration. And third one is complex products. They are not able to understand all kinds of products, so very complex is also reduces the chances of enabling the insurance. So now let's move to the next slide. To achieve insurance for all by 2047, we need a good strategy. So first one is digital distribution, means making available insurance online or digitally. Second one is Bima Vahakas, deploy women-centric agents, then parametric products, bundle offerings, claims efficiency, financial literacy. So let's achieve the insurance for all by 2047. Thank you.